COVID-19, it has impacted the globe, absolutely, and it's impacted every one of our lives in small ways for some, in huge ways for others. And frankly, we're concerned. We're concerned about you. We're concerned about the people close to you. We're concerned about your business. We're concerned about your clients. And when the CARES Act was announced, Todd and Tony happened to be connecting and chatting. And Tony Rose you're going to learn a little bit more about Tony in just a minute, but he is a longtime client of Legacy. He is a longtime friend of Legacy. He is a man that is full of wisdom, and he is a CPA extraordinaire. And Tony offered to help decipher the CARES Act for all of us, and specifically in terms of how you may be able to apply it in what's available in your own business and also in some client situations. And please keep in mind that this is a moving target in terms of what is the CARES Act and how does it behave. So Tony's going to keep you up to speed as best we can. We also have here, we have my partner, our managing partner, Todd Fithian. And Todd is going to be taking the helm in just 1 second here. But let me say this, is that we want you to take care. So we want you to take care of your health. We want you to take care of the people close to you. We want you to take good care of your business. We want you to be able to take care of your clients. And for this session, we want to encourage you to take care to simply be present, to focus in on what's going on in this session, what you can learn and what you can apply along the way so that you really make the most out of this time. With that in mind, Todd, let me hand it over to you, and everyone, welcome to the call.
Hey, thank you, Chris, and welcome everybody. It is good, especially in these times, to see so many familiar faces. I know everybody's busy, and one of the ways in which you're busy is probably trying to decipher this, like all of us, for ourselves as well as for your clients. No doubt that these are troubling times, as Chris has stated. But no doubt, like everybody's telling you, this will pass as well, and we'll be stronger on the other side for it. As Chris mentioned, Tony Rose is not only, a client and a part of our network at Legacy, but he is absolutely one of those clients who's just grown to become a really good friend and trusted advisor. When my brother passed away almost 15 years ago, Tony was one of the first phone calls I made, and really helped us navigate some challenging times. And no doubt the other day, as I was thinking about the CARES Act and its application and benefits on our business as well as our clients' businesses, Tony was a call that I made. We had a great conversation. And as Chris said, Tony wanted to lend a hand, and so he's here to communicate, what he knows today. Tony's great, super, super smart individual that you'll figure out here soon. He is founding manager of Rose, Snyder, and Jacobs on the West Coast, basically in the Los Angeles area. Runs a very, very successful accounting firm, and they serve a lot of very high net worth, ultra high net worth families in a lot of areas. So he's going to share his expertise, and as Tony will share when he gets an opportunity here. Listen, this is a moving target, even as late as last night for him personally. Things are changing, things are evolving. And so like most, does he have 100% of all the answers? Probably not, but he's got a really good handle around this. And I believe what you'll hear today from Tony, and you'll have a chance to interact around, will not only help you, but to help you help your clients in a greater capacity. Tony wrote a book a number of years ago as, part of being a member of our network, called
The first book. Say Hello to the Elephants.
Yeah, Say Hello to the Elephants. And wow. And it's an amazing book. He's got a copy here. And basically, for those of you that are super familiar with our process, as a CPA, and you'll find out quickly he's not your typical CPA. Tony applied his take on our process in delivering value, high-level value to his clients, and that's really what the book is centered around, and the book is all about. So, again, super individual, super smart, runs a very successful business, and please welcome Tony Rose here today.
Hi, everyone, and good morning, afternoon, depending on where you are. It's good to be here with you. I see some faces that I haven't seen for a very long time on this screen. Tim, Chuck, Larry, and others, and Rob. It's really great. Thanks for waving, Larry. The thing about what's going on now for me professionally is that in a really kind of distorted, grotesque way, I've never been more stimulated because what's going on now is dynamic. It's changing day to day, and it's important for us to not only understand the technical pieces of this legislation, HR 748, but also the spirit of this act, because so much of it was written in haste that there's a lot of ambiguity. Last night, at some point in time, the SBA issued a new frequently asked questions section that actually changed our application. And as Todd was talking, I had our office manager come in and slip me a new application that I needed to sign and get to our bankers immediately. And we'll talk about that in a minute. I hope this will kind of be open, and you'll type questions that Chris can read and give to me, or however Chris and Todd want to run this. I want you to know that I'm just doing the best I can. And we're all just doing the best we can for our clients. And that's all we can ask. There is a lot of misinformation out on the net. And so when I got the first notification about the change early this morning, my time, I ended up having to go to the SBA website itself to see the notice release, because there's just bad information. In fact, we got a worksheet for the calculation of the allowable loan by a bank on the East Coast, and it was out and out wrong. The calculations were out and out wrong and not part of the code. So that's kind of the preface. It is important for you as financial service folks to make sure you're teaming up with the CPAs you work with and the attorneys you work with to make sure that you're jointly pulling the wagon at the same time, that you're coordinating with them, and you're not what we've called in the early days throwing scuds across each other with conflicting information. The last thing we want to do is put our clients in the position of having to pay a $250,000 penalty for fraudulently representing some of the items on these applications. So please be very careful. Todd, shall I kind of start from the beginning of the act and what the broad idea is, or how shall we work this?
Yeah, I think start with a broad scope, and then we'll see if some questions come in. If not, I've got some specifics that I'll ask you to kind of hit on if you don't hit on them in the broad stroke.
Great. All right. So the object of the whole act was to provide relief for America for the projected loss of jobs due to COVID-19. And so the spirit of this was to at least in the provisions that relate to employers of under 500 people, to make it possible for these businesses to continue to pay their employees. Now, there's certain difficulties with this that we'll talk about. And please take notes on this. I don't have slides and stuff like that. I just haven't had time to put them together. And there's plenty of people that are producing seminars, hour and a half seminars with slides, and you can get those. So take notes and write down any questions you have. There are a number of provisions in this act that are a relief for the employers. And in the near term, the provision that is of the most interest is the SBA provision, something called the PPP, a Payroll Protection Program. And the Payroll Protection Program is a modification to Section 7A of the Small Business Administration, which is the small business loan provisions, which had been relatively restrictive and hard to get. And in fact, I've never gotten an SBA loan for a client because we've always had experts who are experts in Section 7A do this for our clients and with banks. In fact, there were only certain institutions that were qualified by the SBA to give these loans. So not everybody's bank was already signed up with the SBA. The modifications to 7A for the COVID crisis made it virtually it made it possible for almost every employer to make a representation that they are radically affected by the COVID crisis. If you're under a stay-at-home order, it is almost certainly going to hit your business. Now, I'm not saying that you should encourage your clients, if they absolutely don't need the money, to take money out of the mouths of other businesses, because already it's anticipated that I think it's 748 billion, I might be wrong there, let's call it 750. 350. I think again, the actual number is 348. That amount is going to be called for very quickly. Bank of America and not Bank of America, Citibank and Wells Fargo, I understood, for example, announced that they were already out of money. They had already committed all that they were allotted. And I don't know what they were allotted to. I heard a rumor that Bank of America may have been allotted $10 billion. And I think the Treasury has to buy those loans from B of A so they can recoup, not B of A, Wells Fargo, recoup their capital requirements. But I don't know what that is. That could just be apocryphal rumor. Initially, it is true, though, B of A said that they were only going to take care of customers that they already had credit relationships, not deposit relationships with, which was very, very bad. B of A the next day changed. And so each bank is going to be different. Now, there are many banks that hadn't had a relationship with the SBA, and they are authorized under most circumstances to be able to create that relationship with the SBA. So you're going to find those banks might be 1 or 2 days behind the curve in being able to accommodate their customers. Our recommendation is that any client that has a personal banker work directly with their personal banker to help run interference for them. In the case of this change in the law that happened in the change in interpretation of the law that changed last night, we actually communicated with our banker and said, if it's not going to hold up our application, we're going to change it. And it was a matter of about $45,000 for us. So just now I re-signed the application. We've mailed it into our banker. He promised us we would not go to the back of the line. You do not want your customers, your clients, to be in the back of the line on this thing. How is the PPP computed? I'm going to be real general. You can look at the exact wording if you like, but you compute it this way. You take your average monthly payroll for 2019. You add to that group health insurance, other employee benefits that are for the whole group, retirement contributions, and your state employer taxes, your state, like state unemployment. You multiply that number times 2.5, and that is the that is the number, possibly some modifications in there, that you can qualify for and request as a loan. Now, the form itself adds to it an amount that you may have, that your clients may have requested for financing or a loan through the SBA called an EIDL. And there's two aspects to the EIDL, which is the Economic Injury Disaster Loan. And that's Section 7B of the SBA rules and regulations. There is a grant if your clients apply for an EIDL loan during this period, and it's going to be used to pay payroll, you are going to include that on the application form, and that's probably too detailed for right now. So you're going to get the 2.5%. Now the 2.5 times is modified for employees that make $100,000 or more. So the average monthly salary for someone making $100,000 and more can only have a value of $8,333. $8,333. I'm sorry, I think I misspoke that, didn't I, Todd? Okay. There was a confusion, and there has been a confusion for the last 3 weeks as to whether that $8,333 was all cash and prizes paid to that individual employee, or whether you could put the benefits and the group health insurance, etc., on top of it. We had taken the position, because we're an accountant, we're conservative, that the total cash and prizes what could only be $8,333. As of last night, the answer to question number 7 of the FAQ specifically says you can add those benefits for that over $100,000 person to your calculation of average monthly salary. Now, it's also important to understand that there's rules for employers that may not have been in business for the entirety of 2019, or for seasonal employers. We have one client that's a water park. They ramp up their employees beginning mid-June and hire them through Labor Day. Is Labor Day the September holiday? Is that what it is? It's Labor Day, right? And so they have a lot of payroll for those 2.5 months, 3 months, but they don't have an average monthly payroll. And the provisions say that if it's reasonable, if that's your average monthly payroll, you can apply using that. And so you have to talk to the CPAs that you're dealing with and have them help you to decide what payroll to use. The importance of the PPP is that if the employer uses the payroll, the loan proceeds for certain purposes over the 8-week period from the time they get the loan to the end of that 8-week period, then there will be a forgiveness of the appropriate amount that's expended on payroll and other items besides payroll, namely rent, utilities primarily, and like interest and mortgage payments, things like that. There's not been a lot of clarification on the forgiveness. There's going to be more things issued. So I'm not sure how the mortgage payments are going to factor into this. In the application, you are promising to use 75% or more of your loan proceeds for payroll. So as long as 75% of those proceeds are used to pay payroll, then you are going to be able to get a forgiveness. So the loan is a very good loan, even if you use none of it for payroll, although you're supposed to certify that you're going to use at least 75% for payroll. Why is it good? Number one, there is a forgiveness of any payment, I believe, for 6 months. Number two, the interest rate is 1%. The SBA initially said it was going to be 0.5%. The banks pushed back because the banks could not make any money. However, interestingly enough, the fees that the banks can charge for the writing this loan and charge the SBA for is on a sliding scale. I believe it's beginning at 5% on $350,000. So the banks can get money for processing these loans, but it's 1%. It's a 2-year loan. So it's really very, very cheap money. And the bonus that if you use it for the appropriate purpose, you do not have to pay this loan back. Now, you have to actively go after that forgiveness by after the 8-week period and under conditions that the banks are going to specify. We have an idea of what's going to have to happen, that you've spent the money on the appropriate items. Here's the rub. Assume that your clients are going to get audited for this eventually. You absolutely do not want the clients paying for their Hawaii vacations, if anybody's traveling anymore, or taking draws based on this money, other than draws they would be taking for their self-employment income. And this is an important point. Many of our clients are paying independent contractors. Independent contractors are not to be included in your payroll calculation. Many employers hire PEOs to pay their payroll for them. Those employees may absolutely be included in your payroll calculation. And the SBA clarified last night what you have to demonstrate to a bank to prove that these people should be included in your payroll. Another item on the application that your clients are going to see is if they are a 20%, who are the 20% greater owners or greater owners in the business, and that has to be limited on page 1 of the form. It's a form 2483, and you want to look at the revision date of 4/20. There were earlier revisions to the form that clients may be using. You want them to use the updated form. The other thing is that they want to check to make sure your clients are not greater than have greater than 500 employees. And there's affiliation rules related to that to determine whether in the aggregate a bunch of employers together are affiliated for the affiliation rules. That rule was clarified last Friday night by the SBA, and the determination is if any of your clients commonly own 50% or more, or control 50% or more, or have management control over 50% or more, then those employers need to be aggregated for the 500-person rule. Also, the SBA clarified that the 500-person rule. So this is for all. This is a law for all employers below 500 people, because there's other provisions in the act that's and there's going to be a phase 4 probably that for employers that are larger employers. There are cases where someone with more than 500 employees may qualify under the SBA rules, and there's certain standards for the SBA, and you're going to have to look at that. So we've covered what the amount is. We covered what forgiveness is. You are certifying under penalties of perjury on this form that you need this money because you've got uncertainty in your business. Again, we think every business probably is uncertain now, and so they probably qualify there. You also have to certify whether anyone has been convicted of a felony, is behind on their child, I think their child support, things like that. Some people have been confused about the allowable payroll. Early on, many banks thought that the federal income tax withholding of the employees had to reduce the amount of that you can get on the loan. That was absolutely wrong. Although actually, in the law itself, there is an inference that income tax withholding needed to reduce the payroll. But under the spirit of the law, I knew that that was always wrong. And then they finally clarified that last night. I'm rambling, Todd. Where are we now?
No, this is fantastic. And I've got a bunch of questions, but I'm going to pass it to Chris because I don't want to dominate what I'm thinking people are thinking and things. So Chris, did anything come in here for Tony? This is great, Tony.
So one question would be, so as an advisor, what should I do first with this?
Take a breath. It is absolutely as fast a pace as if it was an April 14th for me. So take a breath. I would get all the advisors around the table. I would do a quick conference call with all the players and plan. We call that around here quadrant 2. That's the solution phase. We want to get information about what do we have, what are we going to do, who's going to do what. We don't want everyone talking at once. All the banks now pretty much have published the information you're going to have to gather. You can have one set of people gathering the 941s. A lot of banks are requesting articles of incorporation or their LLC agreements or other kinds of documentation. So you have one gather documents, you have one enter into the analysis of the payroll, and you make sure you separate duties and do this just as quickly as you can. They are going to run out of money on the first phase. Yeah. They're going to have to increase the money.
Well, and this is part of the take a breath in terms of, okay, there's a lot to absorb, so slow down and absorb it. And at the same time, it's like we need to take action fairly quickly, although more may be extended. And what I'm hearing you say, Tony, is that this is a great opportunity for all of you on this call to really to either maybe for the first time or once again step into a leadership position around that planning table in taking care of these clients' needs. That was a great distinction you brought up right away on that.
Well, that's the only way this is going to be done. I talked to a client last night who is a very wealthy guy who has several rentals. One is in a senior community, and we actually don't think there'll be a problem with those seniors paying their rent. But another, a commercial complex where everyone has closed their doors. Mm-hmm. He didn't expect to hear from me because he didn't think he needed any money. And actually under this program, he probably doesn't. But under the EIDL program, which I referred to earlier, he may qualify. And he appreciated just hearing my voice. Yeah. So that beyond the fact that you have to call your clients and make sure they're calm about their investments, it's an excellent time for this group to talk about rebalancing. It's an excellent time for this group to talk about making sure the insurance coverages are fine. I think Todd and I talked yesterday about it's never been a better time to check whether all of a sudden these clients are feeling their own mortality. Mm-hmm. And the other thing is that we don't want to cut any of the advisors out of this equation. What we do now is going to count in the future, not only in the book of life, but with the professionals that we work with. It is everybody's show here. It's not one individual advisor's show. And the advisors that don't work well with others, I think will be remembered for years to come. We need to make sure everybody's included in this process.
Excellent. So here's another question, and I've got a stack of them coming at us now, Tony. Okay. So this question was, is there any relief in the CARES Act for a financial advisor who hires independent contractors and keeps paying them during the crisis instead of letting them go?
Absolutely not.
Okay.
It's interesting how for S-corps that haven't paid, where the clients haven't paid themselves properly, or people that have avoided having to pay payroll taxes or workers' comp and all that kind of stuff because they didn't want to, this is going to come and actually have the reverse effect.
Okay.
It takes a pandemic, but those people that absolutely, it's been now stated 3 or 4 different times in guidance, no independent contractors. Why? Because if you're an independent contractor, beginning April 10th, sole proprietors and independent contractors can file for their own PPP. Now, what that's going to look like, I'm not exactly sure, and it might only be, $8,333 a month times 2.5, plus your health insurance. But that's still 17, could be $25,000. You don't want to walk away from $25,000.
Right. So for the advisor who asked me here, I'm a single financial advisor who is a 1099 contractor. How do I qualify? The answer is
that you document that you're paying self-employment tax, number one, by filing a Schedule C. And so they're going to probably ask for your Schedule C. Mm-hmm. And then they may ask for your copies of your 1099s. You should have been getting 1099 MISCs. Now, if you were dealing with, let's say you were you're a retainer financial advisor or an AUM, and you've got a personal client that's been paying you, and you don't get a 1099 MISC, I would think conclusively your 2019 Schedule C or single member LLC form should work. And if you don't have a 2019, many banks will take a representation by you of what your revenue is going to be, and will take a copy of your 2018 return.
Okay, awesome. Here's another one. What about a business, specifically a medical practice that opened in January 2020? Does it still qualify?
Yes, the measuring period, Chris, for new businesses is from January 1st through February 29th. Again, that's in the new guidance, but we always believe that to be the case as well. Now, if you opened up January 20th, you could go January 20th to February 29th, divide by the number of weeks, multiply the weeks by 4.3 to get an average salary. They're looking for a good faith effort by you to come up with a reasonable average monthly salary. And the banks are not necessarily going to be held responsible in any way to, other than in a cursory fashion, check to see if you have records that document it, but they're not going to look behind your records.
Got it.
But somebody might, Chris. Somebody might.
They might. So we need to be aware of that.
Yeah.
And so just to clarify, I think this is in the same, actually, let's look at this. So hypothetical, just that I made up. It's not. What about other tax benefits that clients may benefit from? For example, someone heard that RMDs don't apply this year. They also heard that clients have more time to make contributions, to make backdoor Roth IRA contributions for 2019. Are these true? And what other tax benefits should we know about? These are
Well,
things.
let me think.
So I wanted to ask.
Let me think. With regard to the delay of making IRA contributions, you know what? I haven't specifically looked that up, but my guess would be you have until July 15th. One of the provisions is that for federal purposes, and you're going to have to look at your individual states, you do not have to file your income tax returns until July 15th, and you don't have to pay. Now, the initial rules came out and said that for amounts up to $1 million, which caused us pause for some of our clients. But now it's any amount of money. This is income tax returns. Individuals, partnerships, trusts, and gift taxes as well. Now, the June 15 and estimated tax payments for 2020. So you can make your first estimated tax payment, which is normally due April 15th, on July 15th. This does not hold true for June 15 estimated taxes. It's kind of quirky. They may change it. But right now, if you think you're going to owe taxes on June 15, you got to make that June 15th payment. And then you make your first quarter, your April 15th payment on July 15th. Many states, for example, like California, have pushed everything back to July 15th. Here's what's not extended. If you've got a certain amount of time to protest something or file an amended return or foreign reporting, forms 5471, and certain other forms, you need to check with your CPA about when they're due. As of today, the County of Los Angeles, and we've been under lockdown since March 13th, has not said that if you can't pay your property taxes, which are due on April 10th, that you are going to be penalty and interest free. Although that has been the recommendation of many county government organizations, only Sacramento County, Chuck, in California, has said they'll waive penalties and interest. So you're going to want to look at each individual city and county and your state also about these issues. So that's time for payment. Now there's more. There are now nobody who is required to take an RMD needs to take it in 2020. That's to mitigate the drop in the market so that people do not have to sell assets in a down market to do their RMDs. So that's very important for your clients if they do not need the money. If they need the money, what are you going to do? Next, there is a hardship distribution for people that are under the age of 59 and a half, I believe. And you double check that, but I'm sure that's the case, that you can take up to $100,000 out of your IRA without penalty. And that $100,000, but you have to certify that you're doing it for a direct COVID-related hardship. So I'm not going to get into that because I haven't looked at it very closely yet. But you can take that $100,000, and then I believe it's 2 or 3 years. Hold on a second. I can check. I'm going to check something.
Okay.
You have 2 or 3 years to pay the income tax on that. And actually, I think it is 3 year. You can then recognize it beginning 2021 over a 3 year. I believe it's beginning 2021, but it can also be repaid. So you can take the $100,000, and if you end up repaying it, you don't have to pick it up as income. And I'm going to have to check about whether the income, the 1/3 of the income has to be picked up in 2020. You're going to have to talk to your local CPAs about that. I am taking no responsibility.
Okay.
There is also the opportunity, Chris, to do a net operating loss carryback. That in the 2017 Tax Act, they eliminated the ability for people to carry back losses. So people that had losses in 2018 and 2019 had to carry them forward. You're going to be able to now take 2018, 2019 losses and carry them back and get tax refunds. So this is to generate cash. I'm not letting you talk.
No, that's okay. There's a lot there. It's fantastic. And I want to make sure that we touch some of these other questions as well. So thank you. One question that we had was, how would an S-Corp with one employee who receives both W-2 salary and company distribution calculate their payroll?
Well, first of all, the dividend distribution from an S-Corp is not subject to self-employment tax or the Medicare tax, and that's not included in your calculation. It's going to be your payroll. Likewise, for sure, we know that partners who have something called guaranteed payments, those are the payments that come forward onto page 1 of that partnership tax return, they for sure will be included in the payroll calculation up to the $100,000. We believe that people reporting self-employment income, because there's many people that don't report it as a guaranteed payment, and there's certain reasons why that is, we believe that the banks will allow that, but that could be a bank-by-bank situation.
Okay, understood. So here's another one. On the PPP application, there's a checkbox section at the very top that has a box for eligible self-employed individual. If a self-employed individual or sole proprietor doesn't have any employees, are they still eligible given that they're impacted by COVID-19?
Yes.
Excellent. Well, that was an easy one. Okay, good. Another question we had was, how will the federal stimulus check be treated on the 2020 tax return?
Tax-free.
Tax-free. You're getting shorter in your answers, by the way, Tony.
Well, that's a layup.
Okay.
Let's talk about that for a little bit, though, Chris, because I just can't let it go. So now many people are worried that they didn't file their 2019 tax returns. Or some of your elderly clients might say, I only get a Social Security check. The government's been very clear. If you get a Social Security check, they know where to push your money because most Social Security recipients have a direct deposit. Likewise, many people that file their tax returns have bank accounts where they get a direct deposit of their bank accounts. Now, I've not encouraged people to put your bank number in. That's the camel's nose under the tent. But there is going to be a site where you can go to the IRS, and they published about that yesterday too, I believe, where you're going to be able to go to a site in the IRS and actually put in your wire instructions for those $1,200 and $500 per child checks. Remember, it gets phased out at $99,000. So for a married couple, it's $150 to whatever, to what is it, $198,000, and they'll go directly into your accounts. If they can't get it directly to your account, they're going to send you a check. That'll be 3 or 4 weeks hence.
Okay. Is the health insurance payment just for me or my family as well, was the question.
That's a very good question. We do not believe that dependent coverage, if the employer pays for the dependent coverage, that may well be includable. However, most dependent coverage on most employers is contributory in some way. So anything that's the contributory by the employee is not going to be included in that healthcare. Pretty sure about that.
Okay.
And that's one where I'm guessing.
Okay. Okay. So we have to keep our eye on that one. Okay.
Right.
So next one is, since no one needs to take RMDs, can they do Roth conversions on all distributions?
Oh, that's a really interesting. You know, I read something, and I don't exactly know. You're gonna have to check with your CPAs on that. I did read something that Roth conversions are going to be possible, but I'd have to research that more. That's a very interesting question.
Okay, good. And then another is, since there are no RMDs, can clients still do a QCD?
I hate to be ignorant. What's a QCD?
I would need someone else to clarify that. I'm just reading acronyms.
That's very sophisticated. Tell me what a QCD is, and I'll tell you what it is.
It is a qualified charitable distribution.
Oh, yeah, sure. Of course you can do. You're not required. You're not. Thank you. You're not required.
Several people weighed in on that one, Tony. So
thank you. You are certainly. It is certainly possible to just operate under the old rules. It's not like you can't take distributions. Another point. The PPP, normally the SBA programs are not available for not-for-profits and religious faith-based organizations. All the rules about that now have been loosened, so a not-for-profit can get a PPP, or a church can get a PPP. They can also get EIDL loans. But we're going to run out of time before we can talk about EIDL loans.
Chris, can I just jump in for 1 second? Tony, you made this point early on, and I want to go back to it because I didn't really hear a final answer, but I could have missed it. I want to make sure that we talk about it. So when you talk about draw for somebody that makes, and this was the change for you, right, last night that came out. So somebody that's making more than 100 grand, you cap them at 100 grand. Are you saying now that, let's just say me, for example, that I can actually take healthcare, retirement contributions on top of that? I can go beyond
that's what my understanding. Group healthcare. Now, for example, I'm old, I get Medicare. We cannot include, I don't think we should include, and we will include the Medicare sup payments that I have to make as part of that healthcare, because it's not part of a group healthcare plan.
Okay, but
so we're going to be very careful about that.
I mean, that's a big change, because I've read everywhere, and up until this point, hearing this from you, that people making over 100 grand were capped at 100 grand for everything. Don't put healthcare. Don't put any of that stuff, even on a group basis. Okay.
It's a significant amount of money for us, and it's going to be a significant amount of money for your clients that have a lot of highly paid people in their organization.
And let's face it, healthcare contributions that we make are super expensive, right?
Yes.
So
and just following in that vein, another question here says, I'm a 1099 employee. Is my family's health insurance payment included? I have 4 separate non-compliant plans for me, my wife, and 2 kids who are 18 and over.
You know what? I really don't know. The terminology is group health insurance. Okay. I think they want to make it possible for people to have their health insurance. I don't think someone would be grossly wrong for including their entire health insurance policy, especially for a self-employed person.
Mm-hmm.
But I don't know. I actually don't know.
Okay, appreciate that, Tony. The other question that we have here is, if you're filing for the PPA as a self-employed person, since you do not have a payroll, what will you need to use the money for to qualify for forgiveness?
That's a very interesting question too. I think normal draws that you would normally take that has to be the answer. They haven't really published any guidance on that at this point. Maybe because they're not accepting applications for these kinds of people until April 10th, mm-hmm. which is 3 days away. Yep. So we might be seeing more frequently asked questions by the SBA in the next 2 or 3 days.
Okay. So we have, and thank you for that, Tony. We have about 8 minutes left here. Tony, if there were two good pieces of advice for this group, one related to what they should do for their business, and one that they should do for their clients, and maybe you already spoke to that about the plan, about bringing everyone around the planning table. But if you had a piece of guidance for them in each of those areas, what would it be?
I heard a wonderful explanation using COVID, COVID as an acronym. It was created by a financial advisor whose name was Jim Dew in Arizona. And with attribution, I want to talk about what those letters mean to him. And I think this is very important, not only for yourself, but your clients. Number one, C, you want to understand what cash you have and your cash resources that you have during this time. O, you need to understand what your outgo is. What are the things that, the necessary expenditures you're going to have to make so that you can understand your burn rate. Everyone understand the concept of burn rate in this world. V, variable versus fixed. There are some expenses which you can control and some expenses which you cannot control. In fact, there's some expenses that, for example, like your rents, that you may be able to get rent deferment, rent relief, abatement, those kinds of things. You want to really have a picture of all that. I, inflows. You need to know what cash is expected to come in. I've estimated, for example, that we're going to have a significant reduction in our receivables. Even though we're spending a lot of time, people are working, we're paying people full, we're going to bill our clients. There's going to be clients that are strained.
Alan, you have a call on.
Alan, I'm sorry for that broadcast. So you're going to want to try to project what your inflows coming in. And that certainly is going to have a consequence of how you're going to negotiate your outflows. And D has to do with decisiveness. There are many people out there that are running around like chickens with their heads cut off. There is a lot of unknown here. Those of us in this group tend to be more entrepreneurial than others. Mm. Entrepreneurs act. Now, we may only have 80% of the information, but we take what we know and we act. And I think you should, you cannot guarantee anybody their results, but I think you can say, based upon what we know, this is what we would do, and then do it, for crying out loud. Because waiting for a truck to hit you is not a really smart move.
No. Good advice.
For your clients, the same advice. COVID.
Same advice. Okay, good. And for any of us who have ever ended up on the pavement breathing in diesel fumes from that truck, that is fantastic advice. So that decisiveness that's key.
There you go.
Hey, Tony, just one thing that came up in the questions, and you hit on it a little bit earlier, but I want to see if you have anything further for the group. So it doesn't sound like you have any level of understanding as to how funds are being allocated. Do certain banks, based upon their need, are they getting a certain amount of money? So we don't know how funds are being allocated. And I'm sure a number of people on here might be affiliated with banks that are not in this thing, or have clients that I have a good friend who's like, my bank's not doing it. I don't know where to go, because people are putting stipulations of you need to have a savings deposit, a savings account or checking account with us, a business account or something. Otherwise, we're not taking you. I know my bank has said we're only working with our clients, nobody else. We're not taking anybody else on. What do you say to people that might be dealing with that? Clients might be dealing with that.
Yeah, good question. One, about we don't know how the banks are allocating their funds, but you can bet your bottom dollar that they are going to. I was trying to look at a document because in the frequently asked questions, I think they talked about that a little bit. But you can bet your bottom dollar that the banks are going to take care of their customers. They're going to take care of their customers that are commercial borrowers first, then their depositors second with high balances, and then everybody else. There are some banks that are taking new customers. You're going to have to connect with CPAs, attorneys, and other financial professionals in your local area to see what banks that might be taking on new customers. In addition, I understand that credit unions are now going to be enabled to do that. I know that QuickBooks has said that they will have a site if you're running payroll on QuickBooks. So there are other resources. You're going to have to keep your ears open for that, because I frankly don't know, but I think we can expect to hear that they've run out of money in the last several days, which is going to push Congress back into session, and they're going to have to do some extensions. God knows what else they'll plug into that legislation. One interesting thing is they might, Trump would like to see entertainment and restaurants be fully deductible again. That would be wonderful for small businesses. And also, boy, I'd love to see them permit deductibility of parking in office buildings. We pay an awful lot of money down here, and theoretically, that's not deductible.
Yeah, I mean, just one thing I'll add to that. I know we're going to wrap up here, Chris, is I made it, my bank was one that I felt like was dragging their feet a little bit to get further understanding of the PPP. And, I made it very clear to them, and, we're definitely not a top relationship, but I think we're a good relationship, a good customer. And I made it clear to them that, listen, if we don't get in time and these funds run out and we miss this window because you're dragging your feet, we're not going to be happy about that. And so, I think it's an opportunity to, to kind of take an advocate's role for your clients, to show them how to take an advocate's role. And I think maybe even how important relationship comes, because if your bank and your banker is not actually in a position to do these SBA loans, see if you can get them to leverage other relationships because you're important to them. They might be able to leverage that with another bank and get you in with somebody. So anyways, just some food for thought on that.
And may I just add real quick, Todd, be very, very nice to these bankers. They know less than we do now. You guys probably know more than they do at this point. And they're just being told to ram through these applications, whatever the bank standards are. And so the niceties that you do to the bankers at this point will be remembered as well. You may want to look for new banks for your clients. But remember, these guys are just absolutely inundated and unprepared to be inundated this way.
Thanks, Tony, and thanks, Todd. Appreciate it. So a couple of closing thoughts before you drop off. One is that we have recorded this. We are going to make this available for download. So if there was information you wanted to capture, that you'll be able to go back and re-listen to it. The second is we deeply want to thank you, Tony, for bringing your voice to this. This is really, you're doing within your industry what you're advocating that we do with our clients, and that's to bring people around the table and share the information and be able to move with decisiveness.
Chris, if I might say, if people have other specific questions and I can possibly help and get to it, if you can email at questions@rsjcpa.com. That's questions@rsjcpa.com. And I will try, and those of you that know me, you know how to get a hold of me.
Greatly appreciated, Tony. It's very gracious of you. We said in the opening here, our goal is to take care of you. It's like we're concerned about you, and sometimes that's through contact, and sometimes that's through information. One thing that we do want to share is Todd and I are going to be holding a conversation on Thursday, really about where to put your focus right now in your business. Where does that focus and attention need to be in order to best navigate social distancing in a high contact business? So how to navigate that, where to put your attention. You'll see in the chat window, I just gave you a Zoom registration piece. It's going to be an hour. It's going to be interactive. There are already, I think, 60 people signed up for this. And so we invite you to be a part of that, just so that we continue to be in contact with people who have your best interest at heart, your peers, to hear what they're dealing with and how they're navigating it as well. So everyone, thank you for being a part of this today. Todd, thank you for being our host. Tony, thank you for being our guest. And everyone, thank you for attending.
Bye now.
Thank you.